Thank you very much and welcome again. I'm so sorry to keep you waiting and thank you so much for your patience. Normally, we do these webinars every week, and given the situation, the way the pandemic is, um, we have not done any seminars, and that's why we just try to include as many people as we can. And these are knowledge awareness sessions. We don't charge for these sessions, so I'm extremely sorry if I'm starting a 1 or 2 minutes late. But I just want to make sure that that there are people who might be late due to certain things. They will join now. That's why I just take 1 or 2 minutes to begin with. And so once again, guys, if you can hear me, please use your chat options and give me a yes or a okay if you can hear me clearly. And I'll be proceeding with my presentation. All right, perfect. Go ahead, guys. Let's make this more interactive. So um, I see a lot of different names here, and it's been great. Some of the names I see from Investor Education Week. We did a 5-day series where we every day we talked about the very beginning, from the very basis of investments and asset classes, and reached to the point where everybody could trade on the live platforms. So today we are going to talk about cryptocurrencies, and since I see different names, we'll start from the very beginning of what cryptocurrencies are. What's the trend been like? If you have any questions, please feel free to discuss. Please feel free to talk about it. If you cannot hear, if you have any issue, just write it on the chat. We will put the recording of this webinar also on YouTube, and definitely, if you want a one-on-one session, we can have a one-on-one session as well. Now, we have heard a lot about cryptocurrencies. We have talked a lot about cryptocurrencies in last so many years. It's been easily a decade now when cryptocurrency has been in existence. Sometimes the value has been higher, sometimes the value has been lower. Sometimes people were hyping it so much, everybody was investing in cryptocurrencies, and sometimes it was just completely negligible. Nobody cared about it. And we'll go through this timeline also. But just to understand what cryptocurrencies are, um, every cryptocurrency, or every when we talk about every digital currency, we talk about whether it is Bitcoin, Ethereum, Ripple, uh, it is a form of decentralized finance. So basically, the cryptocurrencies are based on a technology called blockchain. And these cryptocurrencies, these are encrypted algorithms. Now, uh, these sessions are all about making things simpler. So I don't want to complicate things for you, just to make you understand. Normally, when you do a transaction from your bank account, let's say, or even not from your bank account, let's say a plumber came to you, and he did his plumbing service, and you withdraw money from your ATM, and you gave cash to the plumber, and plumber took that cash, deposited in the bank account. Your bank knows about this transaction. The plumber's bank knows about this transaction, because you are using fiat currency, or you are withdrawing money, or you are transferring it online to his account. So banks are aware. When you have a cryptocurrency, when you have a crypted algorithm, the banks are completely out of this situation. Which means today, if you have to transfer a certain amount of payment to someone and you use a cryptocurrency, which means the banks do not get to know what you have transferred, where you have transferred, because the sender's address, sender's name is encrypted with a code, and the receiver's name and the receiver's address is encrypted with a code. That transaction is recorded automatically in a decentralized financial ledger called blockchain. So blockchain is the technology which is behind cryptocurrency, and that is the reason that why cryptos have always been in focus. Like, just imagine like that. Internet was a technology. After internet was introduced, every .com company which used to get listed used to be bought, because there was so much attention that internet was such a big thing. And I'm sure everybody agrees with it that what role internet is playing right now. Imagine a company which is a .com company, people would just go and buy. That's what started the 2001 market crash, the tech bubble, right? Because people thought that there is no end to it and it's just going to go higher and higher eventually, when we saw it started coming down. So uh, right now, when we talk about cryptocurrencies are nothing else. It's a money which is a part of a bigger decentralized finance. And whatever payments you do, whatever transactions you do are encrypted. The senders and receivers, they do not get to see each other, or nobody gets to know. So there is a lot of anonymous transactions which happens, which cannot be traced, right? So that's the first thing which you need to know about a cryptocurrency. And again, guys, second thing, we are going to talk about a few strategies. We'll look at the live prices of how Bitcoin is doing, the chart of a few cryptocurrencies, some indices. Uh, Please, whatever strategies you see here, let's make sure that before you take any trades in your live accounts or you invest into it, you have to consult with your financial experts, your consultants, your risk experts, your risk tolerance. You have to measure your risk tolerance, because cryptos are extremely risky products. So whatever I'm telling you here, just do not go and apply those strategies right away without consulting or without checking your risk. You need to talk to your consultants first and only then proceed. Now, we understand what a Bitcoin is. Again, Bitcoin was the first cryptocurrency, a virtual currency, digital currency, which started online version of cash. You can buy products or services, but as I said, that cryptocurrencies are a concept which has been around for decades, but still not accepted completely. Today, if you go to a grocery shop and try to buy something from Bitcoin, you cannot, because it is not accepted as a form of payment right away. So what you need to understand right now is Bitcoin is a virtual currency. It's a digital amount. It's a digital cash, which promotes anonymity. And as of now, due to different regulations in different parts of the world, the nature of cryptocurrencies is really volatile, really fluctuating, and the future of cryptos are in a different direction, which we will talk about. Now, just to show you a bit of the timeline, because a lot of people have started knowing about Bitcoins now, after Elon Musk tweeted about Bitcoin back in June and July, and then repeated tweets which made cryptocurrencies volatile. Um, that's where you need to understand that 2008, when the financial crisis happened, first time, people were so upset about the entire financial crisis, because the bigger banks who got involved into it, they got bailed out. And the only class of investors who lost money were mostly the retail investors, and they felt cheated. And that's where the birth of cryptocurrencies happened, the digital currencies, a currency which will not be known to central banks, which can be used as a common medium of transaction, something which is very decentralized. And that's where the Bitcoin was created. 2009, the first peer-to-peer transaction was happened. Satoshi Nakamoto sends 10 Bitcoins to Hal Finney, a computer scientist, an early adopter of Bitcoin, and he was the first person to tweet about Bitcoin. 2010, looking at the progress, Bitcoin jumped, because when it started, it was around 0.0008. By the end of 2010, it was zero point 0.8, which was one of the biggest jumps. After the success of Bitcoin, Litecoin was introduced, and Bitcoin's popular. It was so popular that after that, any other cryptocurrency which kept coming, people started noticing it. Uh, you will see back in 2012 and 2013. So if you see 2013, the Bitcoin prices now have moved to 1164, and people have started accepting Bitcoins. 2014, since with great power comes great responsibilities. Uncle Ben said that in Spider-Man. 2013, after Bitcoin started shooting up, it attracted a lot of attention from any digital asset when we talked about. Tell me, use your chat option. I ask very easy questions, and I'm just to keep you engaged into this session also. What is the biggest risk you face with your online bank accounts, online payment channels, your emails, your email IDs, your passwords? What's the biggest risk which you face? When you keep your money in your bank account, if the bank gets robbed, you know that that's the problem. When you keep your money in a safe store at your home, if your house gets robbed, that's the risk. But when you put your money into a digital wallet, which doesn't exist, what's the risk? How you can lose that money? Okay, I've started getting answers. Brilliant, guys. I know it's a very easy question, but you guys engaging into it means a lot to me. So go ahead, continue. There will be no right or wrong answer. It's a different of the perception. Okay, okay, perfect, absolutely great, perfect, perfect. Everyone here. So everyone agrees the security is the main issue. How the security? If you keep anything online, it can be hacked, right? It can definitely be hacked. Now, if anything you keep online can be hacked, cryptocurrency is a digital asset, entire exchange got hacked, which was called Mount Gox. It got hacked and Bitcoin prices crashed to a low of 760. Now, this was the first time that people realized that these cryptocurrencies, these digital assets are not safe. There's a statement and source whom you're communicating, so identity is key, of course, right? So when that happened again in 2015, Bitcoin continued to go down further. So from 1164 in 2013, in 2015 we saw it down. Why I'm showing you this timeline? It's not to waste your time. I'm showing this timeline to tell you that how volatile and fluctuating Bitcoin can be. So 2021, if you see Bitcoin going higher, uh, don't be so sure that 2022 is going to be completely high. Look at the difference. 2013 it was 1160. 2015 in 2 years it went down to 315. Then 2016 it went up by 121%, touched almost 1000 back in December 2016. And then 2017, from 2016 $1,000, 2017 it went to $20,000, from 1,000 to 20,000 in 1 year. What happened that time? A lot of things happened. JP Morgan, initially Jamie Dimon, the CEO of JP Morgan, who called Bitcoin a fraud, took his statement back. Plus, in 2017, Bitcoin was listed as a future contract with CME. Now, that was the big thing, getting listed into a futures contract in CME. So price went up all the way to 20,000. And there were a lot of retail investors which started buying Bitcoin. They started showing faith in it. And in 2018, that faith was gone. And Bitcoin crashed to 3,200. An year after, we saw again Bitcoin recovering to 10,000. But here it goes interesting. 2020, it went up to $18,000. 2021 reached to $40,000 after Elon Musk, the Tesla boss, he tweeted that he has bought $1.5 billion worth of Bitcoin, and Tesla will be accepting Bitcoins for you can buy Bitcoins, buy Tesla car with a Bitcoin. And that's where you will see from 2021, it went to 40,000, went to 65,000. And then 2021 itself, he said that Tesla will not be accepting Bitcoins because mining of Bitcoins creates a lot of pollution, and we want something which is environment friendly. So we'll not accept Bitcoin for buying Tesla, which pushed Bitcoin prices down. And then in the middle, China announced that they are banning the cryptocurrency trading. And China was one of the largest market. China is by far one of the largest market to adapt to digital assets. Do you know the highest number of fintech startups, financial technology related startups, mobile payment, digital payment, they're in China. So When China bans something like Bitcoins or cryptocurrency, that's a big news. So cryptos went down all the way from 65,000 to 30,000. Can anybody tell me what is the Bitcoin price today? It's important. Go for it. Go for it. Check and let me know. Tell me. Do you know what's the Bitcoin price today? Write it on the chat option. Okay. 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 Go for it, guys. Those who have joined now, no problem. Don't worry. Just check the price of Bitcoin. Check it online. No problem. If you have any, if you're using any other exchange or looking at it, just tell me. No problem. So what I'll be doing is here also, I'll be sharing with you a very live platform. And on that particular live platform, you'll be able to see the live prices of Bitcoins and other cryptocurrencies. Yes, go for it. Perfect, perfect. Others, 30% of people have answered yet. I still need that percentage to go to 50, 60. I know you're listening to me. I know if you're getting bored, that is the reason that why I want you to use your chat option and tell me what is the price of Bitcoin. Perfect. Great. Great. Perfect. See, I'm start getting more answers. So it's around 47,500. What did I tell you? Bitcoin went down to 30,000, and this was not long ago. So now it has moved back to 47,000. This is the volatility of the Bitcoin. If I were to show you this thing on a chart, let me show you the chart right away. I hope everybody can see this. Let me zoom in a bit to make it better. Perfect. I hope everybody can see this now. Very clear. Okay. Now let's see how Bitcoin has moved in last few days. Here it is. And I'm going to take just last 6 months, nothing much. Last 6 months. Actually, you know what? Don't want to take last 6 months. Should take last 3 months. I change it from here. Take last 3 months. So look from June, for example, and let me show you here. So just to tell you, on the right side of the screen, you're looking at the Bitcoin prices. These are live real-time prices at which it is moving right now. And on the horizontal axis on the top, you see the dates. When I use the platform and select across here, cursor, it kind of, so if I put it here, it tells me on 15 June, 3 p.m., Bitcoin price was 40,683. On the right side, if you see, the price is mentioned, right? So as much as I move. Now, if you see this, Bitcoin on 25th June, I have put my cursor over here. Just look at the price. And I just want to make sure everybody's concentrating. What is the price you see right now? 20th July, not June, 20th July, 11 p.m. What was the price of Bitcoin? Please use your chat options to write. Look at the price and write it on your chat option. On 20th July, 11 p.m. I'm going to move my cursor now. Hoping you have seen it. Okay. Go for it. Just put once again. Let me put it once again. Right here, 20th July. Don't worry about the hundredths. Just give me a basic idea so I know that you're looking at it. Perfect. So most of you are looking at it. Thank you. Those who are not concentrating, please concentrate. On 20th July, it was 29,000. And then what happened? Today is September, but I'm just going to go 1 month more and check what was the price on 20th of August. 20th of August, the price was 47,000. From 29,000 in 1 month going to 47,000, and went to 50,000 on 23rd August. And today is 1st September, it's down to 46,000. This is how cryptocurrencies and especially Bitcoin moves. So one thing which we consider here is the volatility of a cryptocurrency. All right, I'm going to show you how you can use this platform and quickly buy and sell this also. Very easy. Just let me get back here to the presentation. And please keep writing your questions. If you have any questions, I'll try to answer it. If I'm not able to answer it, I'll definitely get back to you over a call and sort it out. Now, this was a kind of timeline. So after Bitcoin went down to 30,000, 29,000 low, it went back to 50,000 as I showed you recently in August. And right now it's around 47,000 as you all check the prices. With popularity of Bitcoins came altcoins, and altcoins are nothing else. So we talked about if you see altcoins like Ethereum, Tether, Binance Coin, Cardano, Ripple, Dogecoin, Polkadot, USD Coin. All of these are altcoins. Bitcoin is first, which was created, and then altcoins came into the picture. And now you can see the total market capitalization. Of course, Bitcoin has the highest, but followed by, you see Ethereum is moving really fast. Then there is Tether, which is a stable coin, which is pegged with the dollar. There is Cardano, which is more sustainable and environment friendly than Bitcoin. So tell me one cryptocurrency. No, okay, don't tell me. It will take too much of your time. Do you know when Tesla announced that they will not accept Bitcoins for buying Tesla because Bitcoin are not environment friendly? Bitcoin went down, but one cryptocurrency which went up was Cardano, because Cardano mining is 5% more sustainable than Bitcoin. And the entire blockchain system, as I said, is much more sustainable, much more environment friendly when we compare mining of Cardano versus mining of Bitcoin. And Cardano has been responsible for lifting up the education system of the entire country of Ethiopia. And there are so many things which this technology is able to achieve. So again, there are a lot of cryptocurrencies which are coming into the face right now, and we can obviously check what are these cryptocurrencies and just monitor them. So you must have heard about Chainlink, Litecoin, Polygon. So these are the market caps with which as per last quarter, this is where it has reached to. Now, within these altcoins, a concept came across as stable coins. As the word suggests, stable, which means a lot of these coins are pegged with some assets or stable assets, like either they are pegged with fiat currencies or they are pegged with commodities. These are called stable coins. The word stable itself means, so imagine that there is a cryptocurrency which is pegged with dollar. What do we mean by pegged? We mean by pegged, pegged means that how dollar and dirham is pegged. $1 is equal to 3.67 dirhams. It has been like this for long. It has pegged. It doesn't go much. Similarly, there are some cryptocurrencies which are pegged with the fiat currencies. Fiat currencies means dollar, pound, dirham, like these currencies. Tether is one of those stable coins which is pegged with US dollar, right? And there are a lot more cryptocurrencies like that which are stable coins and they are pegged with the asset class. So if you see, there are different kinds of stable coins. There are cryptos which are backed by fiat currencies like Tether. Then there are commodity backed cryptocurrencies. Like, for example, there are cryptos which are backed by gold or natural gas. There are crypto backed, again, stable coins. Like, for example, there are some cryptos which are backed by Ethereum, non-collateralized. Then there are some stable coins which do not have any collaterals, but they use algorithms to adjust the supply and demand, and that's what it keeps them stable. Now, your question, why stable coins exist at all? Why would I want to have my cryptocurrencies and convert it into a stable coin and keep that stable coin? Because stable coin moves with dollars. So why it exists? Imagine that you have a crypto portfolio and you are expecting that there will be a downfall. and you don't want to hold on to your crypto assets. Now, if you close your positions, book your profit or loss, whatever it is, then you take it out. There is a certain transaction cost in all these platforms. Instead, what you can do is, instead of withdrawing your money back in your bank account and then keeping it, you can just convert your Bitcoin into a stable coin like Tether, and you will get that dollar value of the coin. You are holding Tether coin right now, which is a stable coin, but its value is pegged completely with dollar. So rather than cashing it, you are actually converting it into a dollar pegged asset. And that's what stable coins are for. Now, once we understand about cryptocurrencies a bit, so now you have slightly idea of how cryptocurrencies work. What changed? I don't want you to look at the entire chart. All I'm trying to tell you is what changed. 2017, we saw a massive increase. In 2016, Bitcoin was $3,000. Sorry, $1,000. In 2017, it was $20,000. What happened in 2017? 2017, a lot of retail buyers, they started buying cryptocurrencies. They had this faith. What went in 2020? In 2020, not the retail much, but institutions, large companies like MicroStrategy, PayPal, and so many companies, they started investing into cryptocurrencies. JP Morgan was very vocal about their price target. Elon Musk was very vocal about their price target. So a lot of corporates, a lot of institutions, and institutions don't buy 10, 20, or 100 cryptos. They buy at massive volumes. So institutional trading volume on Coinbase, which is one of the largest exchanges for cryptos, it skyrocketed in 2020. And that was the reason that why it started going higher. So if you see Q4 2020, the institutional trading volume is massive if you compare the first quarter of 2018. So that was one reason that why cryptos prices continue to go higher, because a lot of large institutions were involved. So this rally in 2020 and 2021, it's more driven by institutional investment as compared to retail investment, which happened in 2017. So as you can see, a lot more talked cryptos of 2021. Dogecoin has been one of them. That is absolutely right. You are looking at it right. If you see Dogecoin percentage change in the price of selected cryptos, the highest it has went up is 7,555%. That's right. If you had bought any Dogecoin, whatever money you would have put, it would have gone up by 7,500%. Other cryptos like Maker, Ethereum have also went up. Dash, Litecoin, Bitcoin was up around 113%. This was the data from 28th April 28th to May 4th, which was previously last quarter. After that, cryptos went down, and again, it has started rebounding. If you see performance of all the major cryptos since Bitcoin hit all-time high, you see Cardano, you see Ethereum, Chainlink, Litecoin, everything went down after Bitcoin went to an all-time high. Now, this is something which is really important. And I want more attention to this. Why? Because this is where you can actually be different when it comes to investing in Bitcoins or investing in cryptocurrencies at all. No doubt, investment in cryptocurrencies is risky. And the risk is something which we are going to talk about once we start looking at the strategy part. But this is where you have to understand that whenever the price of Bitcoin has fallen, so what we checked, when Bitcoin went down all the way to 30,000, and this was about time, I think back in June or July, when it went down. So no, that was 14th April 2021. Yeah, correction period. We started checking Bitcoin's price movement. And this is a very good example of how you can do price action analysis. We started checking Bitcoin's price movement in last 5 years and started checking that whenever it has corrected, whenever it has gone down, how much percentage increase after that crash has happened and under what time period. So if you see on the left column of the presentation, just look at the left box of the presentation, and the last one, 10th March 2017 to 24th March 2017. 14 days, Bitcoin high was 1326, lowest was 892. The percentage decline was 33%. but it returned to a new high of 495% just in 14 days. So if you see from 10th March to 24th March, there was 14 days of correction. And after that 14 days of correction, if you wait for a month, you saw that Bitcoin went up by 495% after correcting by 33%. Then, second last, 11th June 2017 to 16th July 2035 days of Bitcoin correction, where Bitcoin high was $3,000, lowest was $1,800, went down by 40%, and then recovered in the very next month and went up to 65%. Then in September 2017, 13 days of correction, 41% decline, but recovery set 70%. And like that, if you see what happened when April 21, it started going down from 64,000 to 29,000, it went down by 54%. And where it is right now, 47,000. Obviously, it has gone up, but we are still looking for whether it's going to be a new high or no, because all of these were new highs. So if it goes above 65,000 is going to be the date of the new high. But what we are trying to tell you is that after every 50%, 40%, 30% correction, Bitcoin has a tendency even to recover back and move higher. Now, look at the other column of it. Crypto's trading at a dip from its recent high. So Bitcoin 2021 high 64,870. When we made this flyer, that time it was $40,000. Decline from the recent high 39%. Ethereum 37%, 55%, 25%. So this was something which you could see that, okay, if cryptos have corrected almost 50% on an average, is this the time to enter? Because so many people ask me all the time, should I buy cryptos now? You have to understand that entry and exits can be timed. And whenever there's a correction, there are two school of thoughts. One is be away from it, it's going down. Two, it could be a good opportunity to enter now. Now, first school of thought, that be away from it, it's down by 40-50%. What's the point of entering it now? It might go down further. Again, it's risk aversion. More than that, it's loss aversion, because if asset price is down by 50%, if you're still not entering, then that means you just don't want to trade or invest into that asset class, which is okay if you agree with that. Second school of thought is mostly an investment, that when you see cryptos falling down 39, 40, 50%, you enter then. But in both these school of thoughts, you have to assume one thing, that yes, there is risk, and you can proceed with either school of thoughts only when you know that you are ready to take that kind of risk. None of this would apply if you are not ready to take risk. If it's your child education fund, which you need in 3 years, and you're thinking of investing in cryptocurrencies, please don't do it. If this is the money which you need after 2 months or 3 months, if you're a retired person, you don't have any job, and you want to exhaust your savings only by investing in cryptos, it's not a good idea. Please don't do it. Globally, analysts have preferred to invest not more than 5% of your total investment amount into cryptocurrencies, because for in short term they are volatile, in long term they might continue to go high, but in either of the cases there is always a risk. Imagine waking up tomorrow in the morning and seeing cryptocurrencies are banned, right? Are you ready to take that kind of risk? So that's the thing which we need to understand about cryptos. Now, how to invest. So obviously you're not just going to buy always buy a crypto, because not everybody's okay with it. Okay, while we are talking about it, why not create a poll? Would you invest long term into a cryptocurrency? Could be anyone. Yes, no, short. Okay, there. Short. Okay. And go for it. Just one poll for all of you, just to understand the consensus of the room, how it's going. Go for it, guys. Everyone, go for this poll, and you will see why I'm asking this. and it has everything to do with your risk, absolutely. So if you're not okay taking that kind of risk, you should not. Let me log in here. Perfect. Yeah. So here's the poll. I'll run it for 15 more seconds. Go for it. Just be a part of this poll. You'll like it. Okay, perfect. 10 more seconds before we go and end the poll. I'm ending the poll. 5, 4, 3, 2, 1. Perfect. 45% people in the room say yes, we will invest long term into a crypto. 54% say no. Now, in this 54%, there will be people who are not interested in cryptos at all, which is okay. It's your risk appetite. And in 54%, there are a lot of people who would like to trade, buy, sell cryptos, right? But what I'm here to tell you is, for those who would like to go for long term, there are different ways to do it. You can buy cryptos and keep it, but also there are different ways of investments in cryptos. I'm going to show you some of them. First is e-wallets. So e-wallets is a very basic idea, right? So what you do is you go into a crypto exchange like Coinbase, Kraken. A very few of them, they work here because regulation is the issue. We're going to talk about regulation also. And you create a e-wallet for yourself and deposit a money and buy cryptocurrencies with that. And then that cryptocurrency is in your digital e-wallet in your online account. If you have to transfer that cryptocurrency to someone else, you can using a e-wallet. How's that? Good, right? So that e-wallet works as your digital wallet. While you keep your cryptocurrencies in that wallet, if the value of Bitcoin or any crypto goes up and you have that crypto in your wallet, the value of that goes higher. If it goes down, then it goes down. And meanwhile, if you want to do a transaction, you have to send Bitcoins to someone, you can do that using that e-wallet. So that's one. Second is derivatives. Now, how derivatives work? Derivatives are not the actual cryptocurrencies. It's a lot asked question. Everybody asks this question about derivatives because there are a lot of online trading platforms which are providing cryptocurrencies in the form of derivatives. Okay, and derivatives do not allow you to transfer bitcoins from your wallet to someone else. There is no e-wallet here. You open a trading account like a demat account or a trading account. You open your trading account, you put money into the trading account, and you will get a derivative, a replica of cryptocurrency, which moves exactly like cryptos move in an exchange. You can buy and sell that, you can long-term invest it, you can speculate it, you can make strategies around it, but you cannot transfer those cryptos into a hard drive to transfer it to everyone. You cannot use it as a mode of payment, right? That's the difference between cryptos in your e-wallet through Kraken and Coinbase and trading through derivatives into the platforms like CMC or with TradeUltra. So that is something which you have to do. Second thing is, with derivatives, there are a lot of different strategies which you can use. And I'll use the platform to show you that how these kind of strategies, they actually work, because you can buy and sell this, you can short sell it, and that is something which is really amazing. So first I'll show you how you can easily use the platform to buy and sell once we finish the presentation, and then I'll be able to show you some strategies which we have built around this. Third is stocks. So many companies are there which are indirectly investing into cryptos. Like, for example, if a company is a company like Walmart, for example, Walmart used blockchain to ensure the safety of their food products, and they combined with Amazon to do that. Oh, sorry, they combined with IBM to do that. So any companies indirectly using blockchain or that can be a good idea to invest. Bitcoin, other coins, has soared. Public companies seen as proxies for the new asset class have sometimes risen over more than cryptocurrencies themselves. So again, if PayPal is accepting Bitcoins as mode of payments, you can invest into PayPal as a company, because tomorrow cryptos exist or not, but PayPal has other revenue businesses. It's the digital payment company, right? So there are a lot of stocks. And then moving on, there are ETFs and indices. Now, ETFs is a very important thing. So you would want to know about how investors. So there are possible crypto ETFs which are up for approval. There are some ETFs which have blockchain based companies, but if you want a proper crypto ETF, it's still not approved. There are it and a crypto ETF would actually allow investors to buy cryptos directly from a brokerage house. And for example, let's say it will be regulated, will be considered by SEC, and obviously, right now the approval of that ETF is still to come. It has not come. It is expected to come by the end of 2021. But I tell you what you can do is, let me take you to the live platform and show you what you can do here. Hope. Okay, everybody can work. Can see this. Look at this. So now, for example, Riot blockchain, right? Riot blockchain is a US based company. And this is, again, there are a lot of such companies and there are a lot of such ETFs or such. So there can be one, I think it is Amplify, lithium and battery tech, transformational data sharing. Right. So there are some ETFs, which I'll show you on a different platform. It's there. There are some ETFs which are available and which have companies which are related to, so those companies which are related to developing cryptocurrencies, those all of them are combined together and put into a fund. So meanwhile, those can be the ETFs which can be a part of it. Better than that, the platform has a solution for it, something called as crypto indices also, which is a very good way to invest. Of course, when we look at the risk part, so what I'm showing you right now, and this is exclusively created by a broker, something called as all crypto index, emerging crypto index. So this is the price of an all crypto index. As the name suggests, this index tracks the cryptocurrencies and gives you a diversified exposure. Then there is something called an emerging crypto index. Now, emerging crypto index will not track currencies like Bitcoin or anything. It will track cryptos like Ethereum or Monero or Dash, the ones which are emerging. Similarly, major crypto index major crypto index will track Bitcoin and major ones. And then there will be different kinds of cryptocurrencies. So there are ways you can invest into cryptos without directly buying them, because there can be banking regulations, financial restrictions which won't allow you to buy coins. So this is one way that you can invest into it. Now, that being said, what about the regulations? So this is so many of you have asked this question right now. What happens? What is the regulation? Cryptos have a lot of hurdles. Uh, if you think what's going to be the regulation part of it, you can expect now, because there is so much of hype about cryptocurrencies and digital payments, Bitcoin and hit all new times high. Regulatory talks have now more than ever have the potential to have something really big impact on the industry. There are so many institutions which are buying in from major companies, and people's interest in crypto, it has actually skyrocketed. It's a hot topic, and not only among investors. uh, Look around you, it has become like a culture. Anyone who doesn't know about anything but they know that cryptos exist. You talk about, look at Elon Musk. He is a hero now. Everybody knows that he tweets about cryptos and it goes up. So it definitely has caught attention. It is volatile, it's risky, yes, but it has caught attention. So in many ways, the first half of 2021 has been a breakthrough, right? And I feel there's a tremendous focus on still a lot of attention which is given to the crypto industry. Now, this is where we have to see that this industry is just evolving. It's really difficult to predict where it is headed to in the longer term in the coming few months. But then um, that's where the regulations come really, really important, because predictions are really impossible. But if you look about what is going to be the regulations, you can expect some of the cryptos regulation to kick in, because in Washington, there are a lot of lawmakers, and even across the world, there are lawmakers who are trying to establish some guidelines to deal with cryptocurrencies, which makes them safer for the investors and less appealing to cyber criminals. So many hacking incidents have increased. Do you know? And this is my one bonus addition to you. If you have not invested into cyber crime solution companies like Palo Alto or Okta Inc. or Zscaler or CrowdStrike, please look at those companies, look at your risk appetite, talk to your consultants, and look into that area. With cryptocurrencies at large, it is so easy to hack major pipelines and corporations, because the payment is done in cryptos and it's difficult to trace cryptos. So a lot of cybercrime incidents have started, and cryptos being digital assets and this era being a digital era, there's so much incidents of hacking and malware and ransomware that there are a lot of such companies which are working and paying so much money to avoid that. So yes, I mean, there are a lot of lawmakers which are trying to work, bring some regulations through which it is more appealing to the investors and safer and less appealing to the cyber criminals. And similarly, if we talk about more about regulations, again, it's one of the biggest overhangs in the crypto industry. It's been talked a lot about. If you look at, for example, a lot of senators in US now, they are looking for a new regulation, at least so that if you have cryptocurrencies, the taxation of that, they are trying to make it more smooth. So it motivates the investors as well to disclose and avoids any kind of criminal activities as well. China is also trying to work on strengthening crypto mining regulation, and I'm sure everybody right now must have seen that how strict China has become for the tech regulations, right? The tech stocks, the tech sector in China is completely under stress due to the renewed technical regulations. So China has also amended, they have brought more regulations to the mining laws. See, in a way, it is good, because even Chairperson Jerome Powell, Treasury Secretary Janet Yellen in US, even SEC chairmen, they all of them, they are trying to understand that how to combine regulations and cryptos and make it more friendly for the investors, right? So this is something which is really important. What it could mean for the investors, see, it will affect the cryptocurrencies. They're already volatile. So, and market volatility is the reason that why, whether it is me or any other crypto analyst who are there, we will not advise you to invest more than 5% of your total portfolio into cryptos. Do not do that. Keep it less than 5%. Absolutely keep them less than 5%, because regulation is a good thing for the industry. If it is a sensible regulation, it's a win for everyone. So, I mean, that's really good. Imagine a crypto ATM, right? Something like that. So it will give people more confidence in cryptos. And I think we have to take time on this, but we have to get it right. I mean, regulators, they can take some time, but they have to get this thing right. And that will be the surge of the cryptos. So there are a lot of institutions which are doing there and which are trying further. If you see, El Salvador became first country to adopt Bitcoin as a legal tender, a South American country, so that counts. Um, if you want to see top 8 cryptos to watch, there are so many cryptos. There are 7,000 coins in the crypto market right now, and could be a lot of confusing. And I bring you top 8 cryptos which you can see. There's Bitcoin Cash, there's Ethereum, there is Tron, Cardano, Polygon, Uniswap, Monero. Let me tell you a bit about Monero here. Monero is considered a cryptocurrency which is extremely private, which means that it's very difficult to trace Monero payments. I mean, there is difficult to trace cryptocurrencies at all, but Monero's privacy algorithm is so strong that it is better than other cryptocurrencies. So in the future, again, to strengthen the privacy measures, Monero technology is something which is really important. You talk about Cardano. Cardano is one of the most talked cryptos. And if I show you right now how Cardano has moved, let me show you the chart right here. There is a question here. Please throw some light on UAE regulations on crypto and exchanges. Very good question. Where UAE stand on this? So let me tell you right away. Central bank does not allow any kind of crypto trading or crypto exchanges. There are some crypto exchanges which are known as Middle East exchanges like Bitcoin, or you must have seen people trading with Binance. But let me tell you this, when you try to do transactions using your bank accounts, there's definitely a query in the bank. I don't know how many of you have tried, but definitely there's a query in the bank and they red flag these transactions. So central bank does not allow the trading of the cryptocurrencies in any form. What you are seeing right now in this online platform is not the actual cryptocurrency, it's a derivative. And Securities and Commodities Authority allow trading of derivatives. So you can, the most legal way to do this is doing through derivatives. Binance, BitOasis, as you rightly said, that BitOasis claim to be the Middle East exchange. But if you pull out central bank laws of understanding whether cryptos are regulated, they are not. Cryptos are not regulated around the world. So this is absolutely whatever the proceeds, whatever the trading, central bank does not. Tomorrow, so let me put it this way. If Binance tomorrow goes bankrupt, so you cannot go to central bank and ask for a compensation or tell them that, we lost money to Binance, because central bank is not regulating it. So central bank is very clear about the laws that we are not regulating any of those. You do it at your own risk. That's up to you, but we are not regulating it. Like, for example, if you deposit your money into any bank, HSBC, ADCB, any bank, if something happens to the bank, Central Bank of UAE is there to do this, right? They are here to regulate it. But when it comes to cryptocurrencies, not. What is the platform that you are using? I'm using this platform. I'm using CMC's platform because I'm using derivatives. I am doing in derivatives, which is legal. Derivatives are regulated by the brokers, the platform provider. Century over here is regulated by SCA. CMC Markets platform is regulated by FCA in UK and in ASIC in Australia. And derivatives trading is common. So I'm using derivatives platform because anything I have to do, I can do it here. I can buy, sell. I can short sell also, by the way. In a derivatives platform, you can go for a short selling if you're expecting cryptos will come down, right? And you can earn an interest over it. So derivatives allow you to do that. BitOasis is claiming that they are DIFC approved exchange. See, you can do your due diligence about the regulation. When it comes to DIFC, I will still tell you, if you try to do a transaction and use your debit card, use any of the bank and try to do it. Or you try to withdraw the same amount in your bank, it's not accepted. They will either close your bank account after that transaction or will definitely give you a red flag, because all over the world, it is not regulated by the central authorities. DIFC approved exchange, I mean, there are a lot of exchanges which have a lot of regulations, but none of them is central bank. So you have to be very careful when you're talking about currencies. It has to be central bank regulation, nothing else. Otherwise, if you're looking from an investment perspective, I would still suggest that go with derivatives, but please assess your risk, because derivatives also have the risk part. Because a lot of derivatives, they have leverage based rate, and these derivatives, they are given by companies like CMC, Saxos, and IG, the private platform providers. So tomorrow, if they suspend the trading of the cryptocurrencies, there's nothing you can do. It's perfectly legal for them because liquidity comes from them, so they can suspend the trading. So sometimes you take in a position and there is a wild volatility, and the broker has to cover its risk, so they suspend the trading, or due to lack of liquidity they suspend the trading. It is perfectly legal. You won't be able to do any transaction. So those are the risks which you face, right? Let me quickly show you the price movement in Cardano and show you one strategy which you can do before we go here. Just 1 second. Yeah, look at this. So we are talking about Cardano, right? Look at Cardano's price. Look at this. This is the chart for Cardano. And again, I will take you just right here. 26 January 2021, it was around 30 cents. And since January, in 8 months, from 30 cents, it's gone up to 2.8, right? Look at this. And in between, in May, it went to 2.3, it went down to 1.03. From a technical perspective, those my friends who are interested in technicals, perhaps you can see here that there is a very neat support right here. See, it couldn't be better than this. Look at this, right? If you had a consultant here, would definitely tell you this. Look at this. So next time you know where to at least expect a buy. Look at this. Brilliant, amazing support. Look at this. And don't think it is not capable of coming down. It can. I mean, I hope if you have a buy position, it doesn't. But then you know when to go for a buy next time from 2.8. If it comes near $1, see how strong the support is, right? You can definitely check this. So this is something which again consultants can definitely tell you. If I go with your platform, am I allowed to take back the amount in AED when absolutely? So you can, because, and I'll tell you the reason why. Because when you are putting money in your trading account, in your trading account, you will send this money to Australia. The broker is based in Australia, depending on which broker you're opening to. And once money reaches into your account, so let me show you here. Like for example, this has, it's a demo account, $16,000. So let's say you put $16,000. Now you do buying and selling, whatever you do. So let me tell you how you can buy this. So let's say you're looking at Cardano. Click here on buy Cardano. Let's say you want to buy Cardano worth $16,000. Since these are derivatives, so you don't have to block complete amount. Or let's say you want to buy $10,000 worth Cardano. You don't have to give complete $10,000. Just give a margin worth 50%, $5,000, and you can buy 3,500 Cardano. Click and bought. You go to your positions here. See, sorry, I've already taken some trades here, but look at this. This is Cardano buy. You have a total profit loss moving $9, and it continues. Similarly, like for example, I bought Ethereum last time when I was doing this session. 1 Ethereum. What was the price here? Look at this. How can I see it? Yeah, look at this. 3rd August. Bought at 2492. See, I bought 2001 Ethereum at 2492. Right now it is 3592, $1,000. So you can, and now if you want to book your profit, just click on this, close it, and it's done. So profit gets booked. You want to withdraw it, you can go to the payment section, you can do it because it's a derivative. So just like any other, all stocks, currencies, these are in the form of derivatives. So you can. So that's the easier way to do it. When you talk about crypto exchanges, you don't know these e-wallets, how long they will be there for, because none of them is regulated. You talk about Binance, not regulated. Read about the regulation of Binance or any other crypto exchange for that matter. I mean, I'm not here to point here companies, but you talk about any crypto exchanges, you will see that a lot of them, they're not regulated. So that way, again, choose the right way to invest in. It's not even about the right company, it's how you invest in the right way. Right, so some cryptos that you can keep a check on: Bitcoin Cash, Ethereum, Tron, Cardano, Chainlink, Monero, Polygon, Uniswap. These are something which are trying to bring revolution. Even some of them could be replacing brokers, online brokers for trading. They can eliminate the middleman, and there are cryptocurrency technologies are capable of doing that, right? So they are changing the face of financial derivatives. Now, something very important which we wanted to talk about: risk in cryptocurrencies. Please do not leave until you know the risk, because that's, again, it's just half information and it will be really, really dangerous, right? So we need to understand what are the risks. When we talk about the risk in cryptos, the very first risk is volatility. I am a firm believer that Bitcoin is going to be volatile for the longest period of time. So you have to be very, very careful. No matter if there is a regulation, yes or no, either way, cryptos are capable of moving a lot. Similarly, unregulated, absence of regulation is very disappointing still, because if cryptos are not regulated, then there is no confidence, right? So tomorrow, if you wake up in the morning and countries have banned cryptos, it's just going to crash. So it is, please, friends, cryptos are capable of going to zero. Don't think it cannot go to zero. It is not backed by any asset, doesn't have any intrinsic value. A question was asked here that what is the intrinsic value of Bitcoin? There is no intrinsic value of Bitcoin. There could be intrinsic value of a company, but there is no intrinsic value of a Bitcoin. Even gold somewhere has an intrinsic value because of the emotions and the amount of banks they buy gold. But Bitcoin doesn't have intrinsic value, so it is capable of going to zero. So you have to be very careful. Um, Hackable. If you use any of these digital wallets, not the trading accounts, the digital wallets. In trading accounts, how it works that you open an account, you put your bank statement into it, and the transfer goes to your bank account directly. There is no third party transfer with the platform providers. But in an e-wallet, anybody can just hack and transfer your money to their own blockchain, and you can not do anything about it. A whole exchange, Mt. Gox, was hacked. So please be careful. Liquidity issues, price gaps, cost impact. If you go through derivatives, CFDs, there can be a cost, there can be a holding cost which is charged and which is charged. But then again, you have to decide whether you want to go for e-wallets, which are not regulated, can be hackable, or you want to pay extra cost and do it in the right way. Then there can be price gaps in the openings and closings. So if you have bought a Bitcoin and closes on the downside, even if you have put a stop loss, it might not take that stop loss because it just opened at a gap. So that is a risk. So these are some risks which we should definitely check. Before you leave, I'll give you this strategy. Try in your demo accounts. I'm available for a one-on-one session as well, friends. And just look at this one. This is something really, really interesting. It's a very unconventional way to invest into cryptos. It's called a pair trade. Okay. In platform providers, like in platforms like what I showed you, you can short sell it. To know more about short selling, you can have a one-on-one session with me and I can tell you how short selling works. Just to tell you that you can borrow an asset from your broker and sell it in the market. So you receive money, and when price comes down, you buy it back and keep the price difference. So basically you make money from the falling price. That's called short selling. Now in this ratio pair trade, see very carefully, we are taking two cryptocurrencies over here. Okay. We are taking Dash and we are taking Monero. We are going long on Dash and we are shorting Monero. Long on Dash means you are buying Dash and you're short selling Monero, which means you want Monero to come down and Dash to go up. Okay. Now, again, guys, these strategies, they have the risk. So please consult your financial expert first. Talk to our consultants, understand your risk, and only then enter. This is for illustration purpose to show you that what's going on. A different way to invest. Monero and Dash, both of them are very privacy focused coins. Okay. They use cryptographic techniques to obscure details about transactions, and like their anonymity feature is strongest than anyone, both Dash and Monero. Monero, best known privacy coin. They have current market cap of 5.69 billion. Dash's market cap is almost half of that Monero. Monero is the market leader when it comes to privacy focused coin, as Dash offers users the facility for both anonymous as well as standard transactions. Now, Monero's use of ring signature coupled with stealth wallet addresses, defining features. So all of this makes Monero a much better privacy coin, right? So for crypto users demanding strict transactional privacy, they would go for Monero. Year till date basis, Monero has gone up by 130%. Dash is up by 200%. Now, Dash has outperformed Monero in terms of gain on the back of the news about launch of the direct payment. So Dash is coming up with a direct payment app, and that's where Dash has gone higher, right? Now, use of the Dash Direct, which is a new app, it can qualify for discounts up to 10-12%. Participating retailers and online merchants includes American Eagle, Best Buy, Chipotle, DoDash, GameStop, Home Depot, Subway, etc. Monero had come under the regulatory purview of US IRS recently, and the agency announcing bounty rewards of $600,000 to anyone who can break its privacy features. Now, Dash's year-to-date performance over Monero is expected to stay medium. Now, this is where the strategy is. If you divide Dash's price by Monero, you will see a ratio, okay? And the ratio which you see is very near at the support levels. I'll show you the chart and you will understand this. We are expecting this ratio to go higher, which means Dash is higher price right now and Monero is lower price. So we are expecting this price ratio between them, the difference, to increase, for which Dash has to go higher and Monero has to come down. So you buy Dash and you short sell Monero. Reason is, see the chart. Now this chart will make a lot of sense for you. See. Now, if this is where the price ratio is, right here, we will be expecting the price ratio right here. Sorry, this is the price ratio, the bottom chart right here. I hope everybody can see this, guys. This is really, really important. Look at the bottom chart, the line chart, which you see, the one which is not colored. It shows you the ratio. Now, when you see that ratio, you will see it is almost at the lowest, 0.8. Support is at 0.6. So you expect this ratio to go higher back to at least, if not 1. Just here, I'm not talking about this level. I'm just talking about this level, right? For this, Dash has to go up or Monero has to come down, and then this ratio will go up. So that's why you go for this particular. So this is, again, this is completely different. This is what the hedge funds are doing. This is how the hedge fund strategies work, market neutral strategies where you can take chances in cryptos. So this is, again, guys, you can try this in your demo accounts. Take demo accounts from your RMs, have a one-on-one session with me, and I can explain you more how it works. Again, every strategy has its own risk. This strategy also has its own risk. We're expecting Dash to go up, Monero to come down. What if Dash comes down and Monero goes up? You lose both ways, right? But that's why we're doing a ratio analysis and consultants are checking. A lot of data is back tested and retested, and then this strategy comes across and we share it with the clients, right? But that being said, again, nothing is risk-free. There is no free lunch. So there will always be a certain amount of risk which we have to check and which we have to always keep in mind, right? So as I said, please be very careful when you are trading into cryptocurrencies, because there is a lot of fluctuation. There's a lot of volatility. We talked about stocks. We talked about ETFs. We talked about regulations. We saw that what kind of strategies you can do. We understood the price, that how the Bitcoin and Cardano has been trending. If you want to have a one-on-one training of the platform and want to learn how to buy and sell, I'm available free of cost one-on-one sessions. Just come and understand. That's all. Why I always want more and more people to join these sessions, because knowledge should not be charged for. What I told you is available on Google. You can go and search it. You might find it. But then we are just here to make things simpler for you, right? Before you guys leave, on behalf of my entire team of Century Financial, my family and myself, a big vote of thanks to everyone and anyone who's connected to the healthcare industry, medical, pharmacy, doctors, first responders, midwives, nurses, who have been risking out their lives in the pandemic for us and for my family. I could not be but more thankful. I wish all of you great health. If you have any questions further, I'll be available to answer it. If you need any kind of one-on-one session, so gentleman is interested one-on-one, how to approach for one-on-one, just talk to your RM who has called you for this, and I'll be able to do that. Meanwhile, I'm putting my email address on the sticky note right here, yogesh@century.ae. If you're not able to find your RM, you can email it to me, and I'll arrange a one-on-one session, and we can connect on Zoom, or you can come to the office and look the office around, and we'll be more than happy to even give you more and more strategy, and not just about cryptos, about everything. Since this webinar was all about cryptos, but there are a lot of asset classes which we are building strategies about. Next week, we'll be back with another session on a different topic about different asset classes. Till then, be invested. Please take a very good care of yourself. And once again, a big vote of thanks from my end to everyone and anyone who's connected to the healthcare industry. My name is Yogesh. The recording of this will be available to you. If you have liked this session, if you have not liked this session, please do review us on Google. We are Century Financial Consultancy, CFC. We are on Google reviews. If you liked it, if you didn't like it, please put this. It really motivates and encourages us to be better and to do more and more such sessions. So once again, thank you so much. And I'll see you once again next week.